Hello, everyone. I would like to welcome you all to today's webinar hosted by CashFlo, and a very warm welcome to everyone who has joined us today. Now, to kickstart our webinar, I would like to introduce our today's speakers. First, we have Dushyant Agarwal with us, co-founder and director at CashFlo. Dushyant co-founded CashFlo to unlock the financial potential of Indian businesses with expertise in digital transformation and strategic partnerships. He has been pivotal in building CashFlo's finance automation and working capital solution. An IIT Delhi and IIM Calcutta alumnus, Dushyant brings 13 plus years of experience spanning roles at Arvind Limited, BCG, Barclays Capital, and JP Morgan. And I'm now excited to have Mr. Kaushal Shah, CFO at Crest Specialty Resins Private Limited, join us today. He has over 22 plus years of experience in corporate finance and strategic leadership. Mr. Kaushal has successfully led initiatives in SAP implementation, treasury optimization, and vendor financing at companies like Arvind. Recognized as global power leader in finance and known for his innovative approach to working capital, he'll bring valuable and real-world insight to today's discussion. With this, I would now ask Dushan to begin with our today's session.
Perfect. Thanks so much, Haryu.
Thank
Thanks again, Kaushal bhai, for taking our time. It's always a pleasure to talk to you. I really cherish all of our conversations, that have happened in the past. So I was quite keen to have you on a panel today and, try to share this with a larger set of audience. And in the spirit of sort of being Arvind alumni, I also decided to wear an Arvind shirt today. So, this is an Arvind brand Arvind shirt, the new launch which happened. But yeah, so, again, thank you so much for taking our time. I think, just to get started for our audience, while, Sharyu sort of gave a quick background about yourself, in case, you want to talk, maybe just in your own words, give a quick background to everyone. I think that will be super helpful, and then we can get started.
Yeah, so thank you, Dushyant, and thank you, Sariyu and Team Cashflow for inviting me for this very important or something which is very close to my heart, working capital management. For the folks who have joined, by profession, I'm a chartered accountant. I'm a 2002 batch chartered accountant, born and brought up in Gujarat, so you can understand the kind of and from a Bania family, so you can understand that we value money, we value the time value of money, and we understand how the businesses should be flourished, how the organization should be done. I had a very long experience working with a textile company, a textile conglomerate, Arvind Limited. Initially, I was a part of a business team. I was handling the business finance for their largest SBUs, initially the woven business, and then for a long time, denim fabric business. While I was with Arvind, I was also associated with their, the businesses which were growing at that point in time, like, advanced material business or even the engineering part of the business. Later on, I was heading the corporate finance, investor relations, insurance, and corporate MIS functions and accounting functions of Arvind Limited. Presently, I'm a CFO of a specialty chemical company. It's a niche resin manufacturing company. We are into industrial resin. We have three major components: composite resin, surface coating resins, and also automobile. The name of a company is Crest Specialty Resins Private Limited, which is based out of Ahmedabad, Gujarat. I'm a CFO with the company. I look after accounts, finance, legal, secretarial, insurance, and recently, I have also started looking after the procurement part of the company. So, have a long experience in the field. But of all that, working capital and finance has remained very close topics to my heart. I always try to learn. I always try to optimize the working capital or the finance cost of capital, everything. And during the course, I have learned a lot from the Dushyant. I have learned a lot from many others who have helped me to excel in this function. They help me to go to those innovative structured products which actually help the organizations when we require funds, when we require to support business for their growth areas. And I'm very happy to share my experiences, very happy to answer any questions and queries, during the course of today's discussion. Over to you, Dushyant. We can, yeah.
Awesome.
Thank you.
Awesome. Perfect. Thanks so much for the background. So, I think Kaushal bhai, just diving straight into it, right? Working capital, like you mentioned, is really important for any business, right? It's the lifeline. But I think in certain industries, it becomes even more critical, right? I think
Yeah,
textile specifically is one industry where, working capital challenges across the board, you will see.
correct.
Construction, I think, is another industry where working capital challenges are there. Capital goods, auto components, right? I think certain industries by design, have this. So just, drawing from that journey, would be keen to hear from you, why, in your experience, working capital was important, or rather, what were the working capital challenges, that you
Yeah,
faced, in your experience, right? And how did you then sort of, try to think about overcoming those challenges?
correct. So I think, Dushyant, uh, what most important or one of the most important responsibility of any finance manager is to arrange a working capital or arrange a sufficient cash for a business. And it can be for a business growth, it can be for securing some of your raw materials, securing business from certain parts of a risk, or supporting your vendors. But this is becoming one of a very large or a prime responsibility of a finance manager. And during my course of work experience with the company like Arvind Limited, there were some typical challenges which we always used to face. For an example, people would know that prime raw material in textile is a cotton, and generally you buy cotton. There are no credits, long credits available when you buy cotton, and there are seasons. So cotton is not available all around 12 months. There are seasons, so you buy cotton for 6 to 7 months of consumption within 1 or 2 months of span, right? So there are months when you have a very huge requirement of a working capital, and you have your limited drawing power, you have limited exposure to your existing banks. And mostly these are front loaded, so those are the couple of months when you need to finish this transaction. You have to buy a lot of raw material, because as the season progress, the quality of raw material also starts getting deteriorated. So you want to cover as much raw material as possible early. So this is one big challenge, because you have a very limited time. You need to arrange a lot of funds, working capital, to secure your raw material at a right price, with the right quality, in the right quantity, everything. The second challenge which we generally face is when the business is, trying to expand their operations, and or trying to get into a newer area of business. So, for an example, from a manufacturing to retail, when you move to, manufacturing to retail, you expand your business categories, and you try to buy material from an outside. Uh, there is a possibility that the vendors are not at that point in time willing to extend long credits to you. Now you have to pay them early. Generally, in a manufacturing cycle, if you are paying 75 days to 60 days, here you are working with an MSME, suppliers, or the suppliers who want their payments real fast, then your credit cycle shrinks drastically. So what happens is that for vendor, you have to pay them within 30 days or less than 45 days. But because you are getting into a new business, you are getting into a new category of a business, you would like to extend more credit to your customers. So your working capital cycle expands in the course of this thing. So all this situation really creates a lot of pressure on working capital, and it requires some sort of an innovative solution always, because these are very typical situations. It is in some cases it is like for 4 5 months, and for that you don't need to go back to your bank and set the limits again and all that. It will take long time, right? By the time banks are back with their limits and their documentation, probably the opportunity is already gone. So, you need to work on some innovative solutions to balance the business requirement as well as your balance sheet or cash flow goals. Uh, and these are the general challenges which we keep on facing in a textile specific business environment. I'm sure similar challenges would have been there in the
Yeah.
capital goods. Similar challenges would have been there in the any other working capital thirsty business environments.
Right, right. I think the first one that you mentioned, I think any business that's dealing with sort of agri purchase, right? So we have clients that, we work with, which are in the F&B space. So now, right now, mango season is on. So, they have to now purchase mango. Again, it's a very short time period, purchase that needs to happen.
Correct.
We have other clients who are into potato snacking. So when they have to buy potato again, it's like a limited time frame. So I can quite relate to it that wherever there's an agri commodity purchase, I think there are these specific times in the year that the purchase needs to happen.
Yeah. And see, at times what happens is that vendor is also willing to, accept the money. They want money faster because,
Right,
they want their cycles to be maintained. Their cost of capital is far higher than, our cost of capital. So
right,
they would want that, they do not get stretched over a period of time, while doing the business. And we need them to support our organization growth, the business that we have got into. So these are the typical challenges which comes when manage working capital.
right. And vendor bill discounting, right, or like hundi system. I think those were probably the
Yeah,
first things that
first.
started off, to solve
Correct,
this kind of an issue where,
correct,
okay, vendor gets paid against that invoice where a financier
correct,
comes in,
correct,
right? And
correct,
then that financier, just on the basis of that invoice, is extending you credit, right? With
correct.
90-day, 120-day, 180-day credit, whatever the terms might be. And I think from what I remember, Arvind was one of the early adopters of this solution as
Yeah,
well.
yeah.
So could you throw a little bit light on that, right? How
So
that
see,
happened?
these were all the conventional methods of vendor financing. So
Mm,
when we look at LCBD, or when we look at the Hundi bill discounting, or even in some cases we were opening LCs where vendor were having the LC discounting limit. But these were all the conventional methods. They had a very long process time. Your team will remain highly occupied because it requires a lot of documentation work. There was a lot of paperwork. It moved from one desk to another, then it will get filed to bank, and then bank will do processing internally. Then the document will go from one bank to another bank. They will also do the processing of those documents, and then again the communication will come back to us. So it not only consumes a lot of internal bandwidth, but it also requires a longer time to do a complete transaction. So TAT of these kind of transactions are always long. Uh, and it requires a great deal of a planning. You need to do a planning even from the day one. Now, in an environment where you are buying or you are taking decisions on a daily basis, it's very difficult to plan out those things in a proper manner. Uh, and it has certain inherent challenges. So one major challenges which always saw was the efficiency and the turnaround time into this. uh, Vendors are expecting payment on certain date, and if you are not able to do it, it not only impacts the vendor, but it also impacts the reputation of an organization. The second thing was the discovery of a cost of capital, because here you are fixed for a year or for a particular period, right? So you don't know whether the external scenario changes, or whether there are any uh, uh, business environment changes are helping you to reduce the cost of capital or discovering the cost of capital, because it was largely fixed over a period of time.
Right.
It may be a 6 month or a year. And the third is a lot of paper. So, if there is any discrepancy, you are completely dependent on a person, right? Your team member, or a efficient team member of a bank. And if they are able to turn the transactions in time or handle the documents well, probably your transaction will sail through. Otherwise, it may take a little bit of time. Uh, uh, and when you open an LC, the vendor is also, at times feel a little difficult for them to do a discounting, because they also have to go through a similar hassle.
Right.
So these are all the conventional method, and it required some sort of an innovative solution to that. Especially, when you are dealing with a mid-size or a small-size vendors, they do not have a bandwidth to manage a lot of things, and they need a lot of clarity, and they need a very quick turnaround time.
Yeah.
And with those conventional methods, we were always finding it a little difficult. While, we were the earlier adopters, we used to do a good amount of LCPD, or we had a very large programs running on the vendor bill discounting. But these were some of the challenges that, we were facing with
Right.
those programs.
Right. And so, I mean, one, I clearly understand the way this traditionally happened, a lot of paperwork, a lot of effort from the finance team of the buyer, going in to run this kind of a program. I think LC also comes with an additional challenge for the vendor
Also,
because their limit gets utilized, right?
yes, yes,
Discount that LC
yes.
now, they need to sort of use
Yeah,
their limit.
yeah,
So that again becomes a bit of a challenge for the vendor that, okay,
correct.
you're giving me the LC now, my limit is getting utilized.
Yeah.
Right. So I think that,
So all these were, and see, technically they all are some or other way considered as a borrowing. So if I am opening an LC, my non-fund based limits has been utilized, and if vendor
right.
is discounting it in his line, then his limits are utilized. So there were always a discomfort, and in terms of a turnaround time, in terms of whether who's liable, whose limit utilization should be there. The costs were also, very high. So it always required some sort of an innovative solution to this. And the the world is changing very fast. The transaction time, the business realities are changing very quickly. Something which was very good 25 years back is no more a strength today, right?
Right.
You need to move to a more agile way of running a business. And for that matter, this is true for the finance team also. While we are mostly a service provider, we do not generate sales, we do not produce anything. But it is true for even a finance team also. We need to adopt ways and means to serve our customers better, which are our internal stakeholders and the external stakeholders. We need to uh, have more transparent way of doing the things. We should have more efficient way of running the transaction. And this were the probably right ways maybe a 20 years back, but LCVD or only discounting. But today's time, it consumes a lot of bandwidth of you know your team as well as vendors team.
Right, right. And now I remember, you are one of the earlier adopters of the reverse factoring methodology using the
Yeah,
trades platforms.
correct.
Back in 2019 itself, you had started this. Right. So, could you talk a little bit about, I mean, you already covered sort of the challenges, right? But what were the benefits that you saw through the trades
Yeah.
usage? And secondly, while implementing it, was there any internal resistance or change management that you had
Yeah,
to do in the organization, to make that initiative a
yeah,
success?
yeah, yeah.
Yeah, if you could throw some light on
No,
that.
so I think, in fact, I'm very thankful to you to introduce me to this, vendor financing program, because I remember we had a very long chat about the digital way of doing the transaction rather than doing the conventional way, and we discuss about all the pros and cons of why we should move from a conventional ways of doing a transaction to a digital way of doing a transaction, how it can help us to meet certain of our organization's goal, reduce our workload and all that. And you know, if you really ask me, there definitely wasn't were challenges when we started this, because the first challenge itself came from your team, because you need to make them confident that these kinds of facilities, they generally help us. Your team is acquainted with running a program in a certain way. They are very happy running the LCBD or some bill discounting, and suddenly you move them to a more of a digital platform where they have to just push the certain documents and release a payment. There were initial resistance regarding the cost, regarding the way the transaction will go through, regarding the security of the transaction and all that. But I think it is where the leadership comes into the picture. We have to give them that confidence. We have to align them. We have to back them. We have to give them that confidence that if anything goes wrong, we are there to support them. And I was strongly believing that because of this platform, or because of this innovative way of doing the vendor financing, uh, there is a chance of doing transactions in a very fast manner, as well as with a very high cost discovery, the cost of capital discovery. Because what happens here is that you are not limited to one or a two banks. Here you have a large number of banks who are helping you to finance the transaction, and they may have a different perspective about you, or they may have their internal different cost of capitals which they can allocate to you. Secondly, I think the way we were getting support on the innovation part or on the technology part, I think we were also confident that all the accounting and all the procedural part we will be able to take care with the support of your team and yourself. So I think that way we were able to run the transactions very smoothly. Um, I remember when we started, it was basically to support a business which was just started, and they were buying fabric from small vendors, and it was basically for a retail business that we were doing this. And what we did at that point in time was, initial idea was to pay them early, but then we gradually moved it to a model where we became a profit center actually, right? So we were getting cash discounts which were higher than the cost of capital at which we were borrowing from a bank, and we were earning the arbitrage income into that business. So something which was started with an idea to just extend working capital, uh, in finally it helped us not only to extend the working capital, also to make a little bit of money through an arbitrage income. So I think uh, obviously when you start something new, there are challenges. Uh, there are challenges internally, there are challenges externally. Vendor onboarding was another challenge at that point in time. The vendor had their apprehensions about the documentation part. You are sitting on a large number of vendors, how to connect with each and every vendor, get the documentation done, convince them. The question was also on the transparency part, whether the system will be more transparent or not, how the vendor will come to know when their payments are happening, what is happening with their invoices and all that. So there were initial challenges, but I think we could come over it.
Perfect. Perfect. Yeah. I think I'll dig a little deeper on that and break that down into two parts, right? I think the first part, just to recap, clear advantages by moving to a digital mechanism
Yeah,
of doing invoice discounting,
correct.
vis-a-vis the paper system, right? I think that value is very clearly, that I think most people in the market would appreciate, right, and understand. The other interesting bit that you call out, which I think still is not fully understood in the market, is how having multiple financiers in a single platform, can help you reduce the cost.
Yeah,
Just by the sheer fact that they are together and they are competing with each other, basically results in a market discovery of the pricing, right? And I think
yes,
from what I remember, we were able to reduce like about 150 bips, in terms of the pricing, just
yeah,
by having multiple financiers,
correct,
on a single place,
correct.
right, and having that true price discovery
Yeah, yeah,
happen in an environment.
absolutely. So I think, see, as against using your cash credit limits, this limits will always be a cheaper. This is my experience and my personal opinion. Our peers can use it, experience it, and then may vouch for it. And if you play it well, it can be even larger,
Right,
because market dynamics keeps on changing. RBI reduces the reserve rate, and then there is a lot of liquidity in the market. RBI reduces the repo rate, the interest rate comes down. But when you go back to your consortium banks or to your working capital bank, they may not do it with an immediate effect. Certain things which you have already, you will go into discussion. It will take 15, 20 days, a month's time for them to implement those things. While here, those things are immediately visible. The extra liquidity in the hands of banks, probably you may get very exciting rates.
yeah,
And those rates can be far, far different from your normal working capital limits rate. So, played well, this tool can really make a big difference in your cost of financing. It can be a game changer, as compared to any other working capital or a traditional way of a working capital financing instruments.
right, right. So yeah, so I mean, one part is just this part, right, which is having multiple financiers,
Yeah,
etc. I think the second part also, which you touched upon, which is now making this even more attractive, that okay, can I actually offer a platform to my vendors where they can request to be paid
correct.
early? They don't even have to wait the 45-day period.
Yeah,
They can actually get paid on day 15, which is a
right.
great working capital unlock for them, and which is
Correct.
cheaper than their own working capital cost,
Correct.
right? And at the same time, now this this arbitrage that can be generated between the rate that they are very happy to discount at
Correct.
versus the rate that we are getting from the financier at our end,
Absolutely.
further helps reduce the cost of capital
Absolutely.
down
So
for a
see,
company.
anything which can become successful if there are two ingredients into it. One is there is a benefit for myself, and then the other thing is a benefit for the other party, right? When it is called what we call is a win-win situations, right?
Right,
So this was a kind of a win-win situation for me as well as for my vendors, because on one side I was getting a solution which was a cost effective and was also giving us a longer credit period, so it will help me to keep my working capital cycle intact without disturbing my working capital or anything else, and also helping my business to grow further. It was also giving a lot of transparency or a clarity to my vendor about their invoices. It was also helping them to get money faster at a much cheaper rate as compared to what they would have gone out and got them this money as a working capital. So I think, this, as I said, if played well, this can be really a game changer for any organization, because it not only gives benefit to you, it also gives a lot of benefit to your vendors. And that can really help you not only to strategize your business in a correct way, it will also help your sales team or your business team to take their sales function in a correct manner. They can extend additional credit if you can get additional credit through this without any additional cost or an extra cost. So here you are making money but also supporting your business in their business strategies.
Perfect. One more innovation there, Kaushal bhai, that we've done now, in the last 4 or 5 years is to make it very sort of, remove the uncertainty for the buyers. We are actually now able to guarantee a 200 bips cashback. So rather than, being variable that, okay, what will I get from financier, what will I
Correct.
get from vendor, etc., what is my exact saving? To take away that sort of complexity and uncertainty, we are sort of, risking and putting our neck on the line to say, okay, you know what, an assured 200 bips cashback is what we will be able to offer
Maybe.
you,
Correct. Correct.
irrespective of whatever your cost of capital today is.
Yeah.
So I think that is something that, we are now seeing in the market, makes decision making a lot easier for companies that, okay,
Correct.
now I can do my business case very easily. This is the cost reduction. This is the benefit that is coming in.
Yeah.
Let's, go ahead and implement it.
No, no, yeah. So I think, see, associating with the cash flow was a big advantage to me, to be very honest. Uh, and because, see, it helped me not only to first understand this product well, it also helped me to process the transaction and implement within the organization seamlessly. And we can discuss about this in detail if you want, what made cash flow a completely a different, or how this association made a difference to us. But we really work together to make this thing successful within the organization, and it has taken a good shape now. It is at a sizable business, or a sizable part of a business is being carried out through these digital, reverse factoring business model. But yes, obviously the cash flow definitely helped initially for me, especially to understand the product, understand the benefits of the product, and also help me to put that product in running within the organization.
Perfect, perfect. Any advice, Kaushal bhai, for our audience on call today, that if they have to explore this kind of a solution, right? What are some of the, like, what should be their thinking model, right? How should they evaluate if this fits for their organization? What are some of the pitfalls that they should be aware of while implementing it, right? So that the initiative can become a success.
Uh, so I think, see, my advice would be very clear that first understand what is your problem, what do you really want to do, and how do you really want to support your business. Because see, nowadays the role of a CFO or a finance manager has completely changed. Maybe 25 years back, those CFOs who were able to get money from a market was considered to be the one of the best CFOs. Now the roles of CFO has completely changed, where the CFO becomes a business partner. They work shoulder to shoulder with your CEO and the other business leadership and contribute to the business growth. Now, understand what kind of a support required by this team from you, because you will not be able to go out in market and do sales, or you will not go to the factory and do any manufacturing. You will need to support them through all this innovative or a structured products, so that their requirement of funds remain intact. So once you identify a problem, then it will be easy for you to identify a solution. The second thing which I would suggest is that better to be associated with some implementation partner. So for me, for an example, when I got associated with CashFlow, I think what I got is almost a zero effort kind of a tool where I could optimize my cost, but effort from my side was pretty low, because what happened is that cash flow took the responsibility to meet the vendor, make them understand about the program, help them on board on the system. They do supported me on the IT integration part. So all those responsibilities were taken by cash flow. So I think it is better to get associated with some service provider like cash flow, uh, because there will be certain technical as well as external hurdles you will face. There will be a lot of questions from vendor. There will be a lot of apprehensions from vendor, and it will consume a lot of bandwidth of you as well as your team. uh, when you have certain support partner, or he will take this entire load, and their team will go and make all the presentations to them, or make vendors aware about them. uh, Second thing is, when you go to an early pay program, generally, vendor would like to know that how much cash discounts they can offer, what kind of, how much early they can pay, what money they will get, all that. And with small and medium enterprises, they do not have a great bandwidth within their organization to do a lot of calculations and handle Excel sheets and all that. So when you have this kind of a partners, they can also take care of this activities and provide them a lot of information and report, because transparency and a clarity is something which will help you to win in this entire business. So if you get associated with these kind of service provider, they will bring those transparency. They will help to automate the entire transaction. They will help you to send right informations, right MIS reports to your vendor as well as to your internal departments and stakeholders. Uh, that will reduce your workload drastically. So I think these two things one should keep in mind, while deciding anything on the digital reverse factoring. First, what are they really want to solve? Whether it's an extension of a working capital, whether it's supporting a business to run, the run or a procure from a vendor and pay very quickly to the vendors, despite keeping all the working capital cycles intact. And secondly, my view is that one should get associated with a good partner, because that will help you to land the program very well within the system as well as to the outsider.
Perfect. Awesome, Kaushal bhai. Thank you so much. That was super insightful.
Thanks,
I'll open it
Tushar.
up for a few questions in case
Yeah.
any folks from the audience, want to ask, understand anything. I think we'll take a few questions.
I'm happy to answer any questions today as well as afterwards. If anyone wants to connect, they can connect me either directly or through you, and I'll be very happy to answer any queries, any questions on this.
Awesome. Thanks so much, Kaushal bhai. Sherry,
Yeah.
do you want to read out the questions? How do you want to do this?
Yes, yes, I'll read it out. We have a question already. This one is from Sandesh. He's asking, as a product designer shaping high stakes working capital products for bank, I'm curious with India's fragmented SME data. Where do you see AI making the first real world impact in working capital products?
Very pertinent question, Sandesh. And I think very rightly put. The data for credit assessment or understanding an SME, is really fragmented across, a lot of different databases, right? You have all the government databases. You'll have data in GST. You'll have some data in MCA. Then you have all the rating agencies, right? CRISIL, CIBIL, etc. They will have some amount of data. Beyond this, there are also a lot of private companies that have come up who are now, collecting proprietary data, right? With respect to, whether it's like a trade information, whether it's respect to, how well they are growing, what are their competitive strength, etc. Now, in a pre-AI world, every integration essentially was like an API effort, right? All these providers had to expose APIs, then someone had to take the pain of integrating those APIs to be able to create a unified view of the company. Where I see AI making a lot of impact is now through the MCP, right? The Model Context Protocol. Ideally, these integrations should become super fast and super simple. I or anyone can now sort of build an AI agent which can seamlessly talk to all of these different data sources, right? Collect all this data and bring it in a single place, right? To create a unified view. And then now using LLMs on top of it, it is far easier to also generate insights, right? Earlier, you used to be dependent on the credit risk models, right, etc., which will predict or which will throw out, some kind of an insight. But today, actually, LLMs can do that much better, right? They can identify discrepancies, in the data, things which are not adding up together, which are not coming together, right? And that can really help you, understand the true picture of any business today. So it's still nascent, but I think all the building blocks are right now in place where, this can really become very powerful in future.
Okay, so we have another question from Bhavesh. He's asking how vendor financing is different from CC or OD, where the rate of interest ranges from 8% to 12% from the bank. How much is the rate of interest generally that bank charges, and what's the credit period we get in this arrangement?
Do you want to take that, Kaushal bhai?
Yeah, I'll take that. So, Bhavesh, I think so. The difference between CCOD limits versus any of the vendor financing limit is primarily that vendor financing limit is a structured finance, while CCOD is more of your working capital limit depending upon your drawing power. Uh, this structured financing are not directly linked with your drawing power. What happens here is that you go to a platform and there are multiple financiers who are willing to give you finance, and these are all unadvised lines given to your company. In my experience, they are far cheaper as compared to your CC or OD limit. So if your range is of any CC or OD is 8% to 12%, which you have rightly mentioned, here you can get at least 150 to 200 bips cheaper working capital finance. Obviously, depending upon the market situation, if the liquidity in the market is high, you can even get low. Uh, I tell you, in my experience, I have got working capital at half of my CCOD rates also. So there is a large potential of saving in a cost of capital. Generally, the credit period extension you can do is around 90 to 120 days very easily. So, for an example, if you are paying your vendor within 10 or 15 days, you can do a repayment after 90 days. So, you get your overall credit of 105 days, or even you can, in some cases, take it to 120 days. So, your overall credit will be 135 days. So these kinds of arrangements are available in the market, and this can really change the way you look at the working capital or the cost of funds that probably you are using it right now.
Perfect.
Yeah,
Would you take the next
thank
one?
you. And next question we have is from Ankit. He's asking what is one of the most common challenge for a CFO, and if the CFO is adopting AI in their company nowadays.
So I think the most common challenge for a CFO today to adopt AI is to convince, first of all, your team members and your management to put money into this, because generally the management or the promoter of any company wants to put money where the sales revenue is generated or the production has been increased. So the first challenge that you face is to convince your management that AI, while it may not directly increase your sale or it may not directly increase your production, it will help us to improve sales margin and productivity through an indirect way. It can also, help you to reduce a lot of cost. So for an example, we did one integration where, so initially, when you do an export, long back, when you do an export transaction, you have to submit a lot of documents manually to the bank. And those documents will go to a bank. Your team will prepare those documents. Physically, those documents will go to bank. Bank will also do a lodgement of those documents in system. They will generate uh, a reference number, then those reference number will come back to you. Those reference number are required to be entered in the system against your invoice number. And whenever the money is coming, you will try to match that. Now, recently, few of the banks have done a very good job in the integration part. And now what they do is they integrate their system with your system. And I have done it in SAP. So on a real time basis, on an every 15 minutes or 30 minutes interval, they fetch data from your system relating to your export shipments. So what your team just need to do is put all the relevant data in your SAP system, which anyway we were doing earlier. They will fetch all the data from our system to their system, process it, put reference number, and again send it back to your system, and your system will get updated automatically. Now, this is a very small example where you can reduce your efforts and reduce your manpower cost, because earlier there were probably 4 or 5 team members who are processing your entire export banking documentation. Maybe with 1 or 2 guy you can do it, so you can half of your cost. Same thing in a chemical industry. So in my industry, the formulation is very, very critical. And, in what proportion we put to chemical will impact the finished goods. Now, one way is to have a manual mixing where, there is a person who puts 2 formulations or 2 chemicals in a particular format. The other one is, use the automated system. Put your bill of material in system, and then the system will automatically decide how much to put which ingredient. That will not only save your cost, but that will also help you to maintain a lot of qualities. So AI or the automation has a lot of advantages, but the bigger challenge is to first, uh, discuss and internally align, our team members and our management towards that, because initial investment into all these activities will be high. And when I'm saying investment, it is not only the financial investment; it also requires a lot of time, a lot of efforts to streamline those things initially, because they will learn gradually, right? They'll not be ready from day one. There will be certain initial hiccups. They will learn from it. You will make some corrections, and then it will over a period of time it will get smooth enough. But in long term, it will help you greatly to reduce cost, reduce efforts, bring a lot of transparency, clarity in transactions. It can give you a lot of good insights about the business operations, production, everything.
Yes, so we have, I guess, one last question. This again is for you, Kaushalji.
Yeah.
What would be your advice to other CFOs or finance heads exploring similar solutions, and what should one look for in a platform or a financing partner?
No, so I think I'm very I strongly believe that uh, this kind of a platform will definitely help. to run the transactions in an efficient way. This will also help you to bring down your cost of capital. But at the same time, it is very important to have some implementation partner, because there are certain challenges, and with the limited bandwidth and limited time, as a CFO, you will not be able to do everything, or your team will have to, their bandwidth will be consumed greatly if they will try to do everything. It requires a lot of vendor interaction. It requires a lot of automation and integration. It requires some sort of intermediate portal where you put all the information and MIS data. And when you are associated with the service partner like CashFlo or anybody else, almost 50, 60, 70% of your load is being taken care by them, and they help you to place this program, land this program properly. So in my opinion, one should definitely associate with the partner. It is not something which comes with a very high cost. In fact, it comes with a low payback, because as I said, we started a program with certain other intention. It was more of a supporting a business to pay the vendor in time, and we gradually moved to a cycle where we were making an arbitrage income. So it's not something which will consume a lot of your cash flow, or it will be very highly cost. Net of the expense, you will be still making some money. So it's not something or the decision is not about whether the high cash flow item should be put in this transaction or not. So you should have some implementation partner always when you go for these kind of innovative programs.
Thank you, Kaushalji. Dushan, there's one question for you. How to handle a paint business working capital cycle where there is a lot of uncertainty. There's debt recovery, takes a lot of time, and the inventory needs to be maintained all the time. How to take care of a working capital cycle here?
Right. I think, again, maybe Kaushal is
Dushyant,
better.
it is like we need Gabbar, but we need Jinda Gabbar.
Correct. No, I think this, see, very similar to textile, right? Very long lead times, lot of inventory needs to be maintained. Receivable cycle continues to be, really long. If you have export business, again, that will come with its own set of challenges, right? I don't think there is a good silver bullet answer, right? To be honest, like Kaushal Bhai said, Gabbar and that to Zinda. But it's going to be a very fine balance between all the three activities, right? I think on the payable side, in this webinar, we covered quite a few tips and techniques to essentially ensure how can you get longest credit possible on the supplier side, right, to ease out your working capital concerns. The other end is obviously on the receivable side, right? Now there are other similar innovative solutions available on the receivable end as well, which you can deploy to, try to bring your receivable under control. Right. So it will have to be a combination of, both of these initiatives, so that you can bring your receivables down, you can increase your payable. And the inventory part, that comes under sort of more supply chain optimization, right? Like, I mean, obviously the leaders in the paint industry, from what I understand, they do servicing like 4 times a day to their dealers, right? So I'm sure they've figured out and cracked the supply chain model where they're able to do this without a lot of inventory. So that will require again further digging deeper into how can the inventory be reduced further. So yeah, it will have to be like a combined effort, tackling payable separately, receivable separately, and then your inventory turnover ratio, separately.
Correct.
Thank you, Dushan. I think that's all the questions that we had today. Thank you so much, Kaushalji. Thank you, Dushan, for taking out the time and joining us today. It was a pleasure having you both. And to everybody who has joined us today, thank you for joining. I've also added a link to the Elevate Finance community that we have. where you'll find more updates on such webinars and events happening at CashFlo.
Thank you. Thank you, Dushyant. Thank you, Cashflow team. Thank you, Saryu.
Thanks again,
Thank
Kaushik,
you
for
so
taking our
much.
time.
Thanks.
Super
Thank
helpful
you.
and
Bye.
insightful as always. Thanks. Take care.